Traders and investors alike were green today. We'd like to take a minute and recap our day. Today was the end of the second quarter, the end of the month, starting a new quarter, the third quarter tomorrow, starting a fresh new month tomorrow, ending the week tomorrow, going into a holiday weekend. Actually had more volume than what I expected today. They're saying the worst 6 months in 50 years, and I'm over here enjoying myself with these nice trends. I think the market's been fine. I mean, I get it. The people who's not in here trading, I completely understand. But if you're in here trading, you know, there's so many opportunities. So this is the SPY. We actually had a double top here at the fill, this gap fill. I was looking at it in a different view, and I actually missed the double top. I was watching symmetrical triangles and all these patterns, waiting for breaks below, and as you can see, either way was looking for a bearish move, got the move down. You can see plenty of opportunities after getting above all your clutter here of moving averages and VWAP. You can see how you've started to flag into the 9. 200, you're looking to take profits. It dipped back below. Had another push up. You can see that candle right there opened above that 200 and ripped. That candle right there is like, hey, you know, take profits. It's just bearish sign, seeing how much wick, seeing it flatten out up here, coming down. That's when I was able to start spotting these trend lines, put this trend line in, still couldn't take it out. And I was extended my line, was looking for a break after putting this top in, was looking for a break below. I seen the double top, but I didn't realize at the time of trading, watching so many charts, that we double top at a gap fill. I would have definitely added that to my decision making. Let's take a look at Tesla. Was able to get a couple of trades on it today. Got a couple of trades on the SPY today. Good day. Sent out some decent trades. So this is Tesla. You can see after was following this trend here at the beginning of the day. You can see right here we pulled down really hard, flagged into the 9. That's an entry. Coming down, put in a tight little flag here, not perfect. Another break to the downside. Then it ripped up. You can see getting through the 9, getting through the 20. That would have been a nice candle to take a shot at. You know, clear the 200. You would always be ready to take profits there because of the 200, depending on your reaction. Come up and started to put in this symmetrical triangle up here, and you can see it broke to the downside. I try to look at everything and try to get triangles, trend lines, just looking for a reason to enter stocks in different areas. You can see right here, kind of double bottomish here, just candles, but couldn't take the VWAP out. Just little things to look for. If you wasn't coming into the end of the day, you would have probably got another pop off that. Of course, you would have been looking to clear some of these moving averages before you would have went in for an entry. Down here, put in a pipe bottom. That's a kind of pipe tweezer bottomish. It's not perfect, but the second bullish candle coming up. It's not a bullish engulfing, but it's a sign of strength. And you can see the bulls took back over, put in a nice V bottom there. So some of the same names that we had that were really strong yesterday were really weak at open. You can see this is Apple. Same deal. I was looking for a flag up here at the top. Come in, bounced all around this 137.64 area. Did not completely fill this gap. Neither was not as strong as the market. Amazon. We did see some heavy put flow coming in on the SPY today as well. Curious what the put to call ratio is, waiting for all the data to come in. You can see Amazon never even took out the opening candle, was weaker than what the market was. And, you know, talking about weakness, AMD, NVIDIA, the semis, you know, they're just definitely have been weaker than the market. We've been looking at them with a bearish mindset. This is definitely not textbook. But you can see we come down here, put in a bottom, pushed up. I was actually watching this as a non-textbook head and shoulder pattern. Shoulder, head, shoulder. But pretty much I was looking for reasons, entries, possible entries on stuff. With a head and shoulders like that, your symmetry's off. But I was kind of looking for the same, see if I could find the same type of triangle pattern on it. And as you can see, my line's screwing up. But as you can see, that would have been the neckline because the symmetry of the head and shoulders was just looking for something. And boom, got the pullback right there. Taking profits here, another snatch up. You could look for another entry right there. I'm just not the kind, use your imagination and say, just an example, say we got in here, we took 50% between here and here. We're going to give 20 of it back to here just to come back lower. I'm not into giving that back. I take the trade from here to here, wait for the reset, take the trade from there to there, and I'm not into that giving it back. I try to catch the trends. Now looking at the trades over a series of trades, because that's how you got to view your trades. You can't look at it a trade per trade. You have to look at everything over a series. And of course, trade per trade, I may make more money at the end of the day riding it out. Over a series of trades, I have found that I make more money, trying to catch the moves and not riding the downside that takes, or in this case would be the upside, but to take money out of my puts. I'm just into catching the winning sides of the trades. So another trader may make 100% throughout the whole day. I may take 2 trades that equal to be 60 and make 120%, or 3 trades that may be 40 apiece and be 120%. In the average day, if I'm able to catch the moves properly, I end up making more trading like that. That's just my style. Let's check out Oxy. Oxy wasn't that strong. I just wanted to point out, the levels we call before we start. When I see anything that's close, this morning I was like, 59, 76 on Oxy. We don't get above that. We're not bullish. Pushed the rate into it, and that was an entry. So you took this level out, the 58.07. You went right into the next level, seeing a resistance, right back to the first level. That's just how helpful the levels can be. Sometimes they work out that nice. Let's look at MU. It had earnings tonight, another semi. And you can see it guided down big time, knocking billions off. You can see it pull back, trying to recover, but it pulled back. You can draw a trend line right on this. And what you can see it bullish here at the end of the day, so it kind of ruined that. But normally you could draw a trend line on this pattern, trying to catch a break to the upside, possibly start drawing lines on the bottom, maybe trying to catch a break to the downside. But you can definitely put a trend line on there. Now, of course, it's no good just pointing that out for future reference. The IWM had very heavy put flow coming on it as well. But you can see the same setup here. I was watching the same setup. You can draw a line right through there, draw a line from this candle to this candle to this candle. You can kind of tell the algos took over this afternoon. But even with them trading, there's still so many opportunities. When you learn to train your eyes to spot these patterns, it's over. Discipline's the key. Training your eyes and becoming disciplined. And, if you can handle those 2 things, you'll be trading for a living. It's just that simple. Some people don't, just like to trade. Some people actually want to better their lives and trade for a living. And, instead of going to slave every day for the 9 to 5, would rather sit home and be with their families and work 2 hours a day. Well, that being said, that concludes our video for today. I hope everybody learned something. I hope to see you in the trading room tomorrow morning. Good luck, everyone. Have a good night.